I'm with Head of Asset Management and Fund Manager James Timpson to talk about what's been happening in markets throughout May. But first, I'd like to congratulate James for an award we've received from Citywire, which, as you know, James, is an industry publication, reputable and renowned amongst our peers, and to be recognised for your achievement, which was the Best Fund Group Award for Mixed Assets and Aggressive GBP in the Citywire UK Portfolio Manager and Group Awards 2025. Quite commendable and quite an achievement. Surely you must feel rewarded. Can you tell us how you feel?
Yeah, thanks, Leo. It does feel really good to win it, and this one does feel especially meaningful because it's judged based on your risk-adjusted performance over a pretty long time frame, 7 years. And we like that because that's pretty much exactly what we aim for. We're aiming to deliver strong returns for whatever the client's given level of risk is, which is why we look at risk-adjusted returns so much. So to be recognised for that does feel really good.
Brilliant. Thank you, James, and well done to you and to the team.
Thanks.
Now back to May, markets, what's been happening?
Well, May was actually a really positive month. So obviously back in April we saw all that market turbulence caused by the tariff announcements and Liberation Day. But since then, trade tensions have eased quite a bit. Tariffs have been delayed. There have been talks between the US and the EU. So investors are feeling a lot better now. So pretty much every equity market was up last month. FTSE 100 was up nearly 4%. The S&P 500 is up over 6%. In fact, the MSCI World Index, which tracks broad, global, developed equities, had its best month since November 2023. So investors are feeling a lot better now than they were about 2 months ago.
So how does this translate to Courtiers Funds and the service we deliver to our clients?
Well, we always favour equity markets. Research shows that over the long run, equity markets will be the best performing assets. In fact, that'll be one of the things that helped us win that award. So whenever equity markets do well, our funds tend to do well as well.
James, jumping to inflation, which itself jumped 3.5% as per your report. Can you tell us the impact of this?
Yeah, so the latest CPI data from the ONS showed inflation at 3.5%, which was a jump of nearly 1 whole percentage point. And that was largely driven by energy bills, household bills. And this was expected. Inflation was expected to go up because of this. But it did increase slightly more than analysts had forecast. And this often leads to speculation that interest rates might stay higher for longer. Earlier in the month, we saw the Bank of England lower rates for the 4th time since last August, currently at 4.25%. But despite this inflation print, the market still expects another 1 or 2 rate cuts over the rest of the year.
So with the brakes on the tariff situation and the sudden acceleration in inflation, what would you and the team hope to see over the next month?
Well, the tariff situation isn't quite over yet. They've only been delayed, so we'll have to wait and see what happens with that. Similarly, after the bounce in inflation last month, there'll be hopes and expectations that there won't be another similar jump this month. But really, it's just a case of continuing to do what you're doing. So, remain diversified across a mix of assets, regions, sectors, and so on.
Thanks, James. I look forward to catching up again next month, and congratulations again to you and the team for your recent award. And if you'd like to read our report on that award, there'll be a link in the summary on the website. As always, thanks for watching, and if you have any questions, please speak to your advisor or contact us. Thank you.